Good afternoon and welcome to NYFP. In mid-afternoon trade, the major U.S. stock averages have recovered from earlier weakness. Joining me this afternoon to weigh in on today's issues is Stephen Guilfoyle of Meridian Equity Partners. Hi, Steve. Thanks for joining me.
Hi, Remy. I am glad to be here.
Well, it's been another choppy trading session. We opened higher, then the markets fell, and now we're back up. Now, given that there's so much going on in the Eurozone, what are you paying attention to?
Well, the market opened higher than I really expected. I guess the positive domestic economic data, we saw jobless claims come in better than the expected range, even the low end of range. And we also saw the trade gap grow smaller instead of larger. It was expected to come in around, I think, a negative 46 billion. It came in around negative 43 billion. So we had some positive data, which I guess buoyed our market because, hey, our own domestic economics should probably outweigh what's going on globally, and in this case it did. As for Europe, that's a mess that's almost too hard to explain. What we see in Europe is, what I think is the massive mistake, is that these countries have given up a measure of their sovereignty. They can no longer resort to the last option of a reserve bank, which is to inflate their way out of a mess. Here in the US, in the UK, where there's also a great debt crisis, the Bank of England, if it needs to, can print money. They can buy assets. In Italy, Spain, wherever else you want to talk about, they have given up that right. They need 17 guys to say, okay, let's buy assets. So they're in a much greater fix. They can't fix their own problems. And we're seeing I think that's a big mistake they have made.
Well, Steve, while we're talking about the Eurozone as well as the debt issue here in the U.S., France's AAA rating has been put on negative watch. But given that we have less than 2 weeks until the super committee deadline in D.C. for the U.S. Trade deficit, how much of an impact do you think that deadline will have?
I think that they may miss that deadline. I don't think, even though there is speculation we'll see a downgrade, I really don't think we will, because I think they jumped the gun last time. I think they downgraded U.S. debt when it wasn't really ready to be downgraded. Obviously, it's still the safe haven that it always was. If you look at yields between the U.S. and almost any other country, U.S. yields are superior. So I don't know if they'll downgrade necessarily. Maybe it'll put us on a negative watch like they're doing with France, because France is probably facing a downgrade, you would think, probably within a week or two. And that's where I stand on that.
Okay, Steve, well, last but not least, before we wrap it up, there's been a slew of global economic data that have been released. But given expectations of a slowdown overall around the globe, why are we seeing crude oil futures advance?
Well, the reason here is the problem in Iran. The whole world's watching Iran because Iran has developed nuclear power, maybe nuclear weapons. We don't know. France is warning them. Our own president, I think, has sent out some kind of warning. The whole world is watching Iran, and Israel, we don't know what they're going to do. So there is, I wouldn't say threat of some kind of action, but there certainly will be some kind of saber rattling probably going forward, and that's goosing the price of oil. Oil probably is expensive here at wherever it is, $97 or so, but that's why you're seeing a higher price in oil than you might think.
Okay, Steve, well, thank you so much for weighing in on all these topics, and have a good day.
You're welcome. You too.